Hello everyone, welcome to the First American Insurance Agency YouTube channel. My name is Brooke Sando and I'm an account executive here at First American. Today we're going to be talking with Doug Montgomery, a senior account executive with over 20 years experience and a trusted risk advisor. Today we're going to be talking to him about the Homeowners Replacement Cost Extension, and he's going to tell us all about it. So let's begin. Doug, what can you tell us about it?
Well, hey Brooke, first thanks for the intro and thanks for being here.
Yeah, you're welcome.
Brooke, you're a newer producer with First American, but I know that you're doing a great job down at Highlands Range, so it's really great to see you up here in Longmont.
Thank you.
Yeah, so dwelling coverage extension, really what that is that in the homeowner's policy, and if you look at your homeowner's policy, what we call our declarations page, which will show you your coverages and deductibles, in that policy, you're going to see dwelling coverage limit, sometimes referred to as coverage A, that's the technical term. But the dwelling coverage limit is going to be a stated limit. So what that limit is designed to do is to provide that amount of coverage in case of repair or replacement for your home. And it's called a limit because that's where it ends. So if you had $200,000 of coverage on your home, your stated limit being $200,000 on your policy, you're going to see that on your declarations page. You could assume that if your home burned down, a catastrophic loss like that, and heaven forbid that ever happens to anyone, but if it did, you can assume that the $200,000 is your dwelling coverage limit and it's going to cap there. Now, that assumption though is mostly correct, but really only partially, because in almost every homeowner's policy, you're going to see what is called the dwelling coverage extension, which is what we're talking about today. And the extension is going to be a percentage of that dwelling coverage amount that is added to the coverage. So that's really kind of what that is elementally.
Okay. Yeah. How many people know about this policy? Many people have it on their plans?
I would say that most insurance policies are going to have some sort of dwelling coverage extension or replacement cost extension. Now, most of them are going to have some sort of extension. Now, the great news is on the independent channel side, which is what we're independent agencies, so we've got many different carriers that we work with, and many of them have higher dwelling coverage extensions than some of the other standard carriers. So, for instance, you'll see 100% dwelling coverage extension, you'll see a 50% dwelling coverage extension, and the very best is you'll see guaranteed replacement cost. And what those mean, again, let's go back to that $200,000 coverage limit scenario. So if I had a 50% dwelling coverage extension on my insurance policy, that's going to provide for me another $100,000 of coverage. It is designed to protect the homeowner against inflationary events that could cause the amount of coverage, what we call the coverage A or the dwelling coverage limit, it could cause that to be insufficient at the time of loss. So inflation, and many of you have probably seen recently some of the articles in the papers or stories that inflation right now is really hitting industries like lumber, like dimensional lumber, 2x4s, 2x6s, those sorts of things. They are skyrocketing in price, and so that of course affects the rebuild of a home, even the repair. So having a sufficient dwelling coverage extension is a really big deal, because at the time when you write your policy, the replacement cost may indicate $200,000 is our scenario, but because of inflationary events like just inflation, or let's say catastrophic losses, even somewhere not even close to you, like down in Florida, like a hurricane or something, that can cause building and material costs to escalate. And so that $200,000 coverage may not be sufficient at the time of loss. And that's what that extension is designed to do for you. Again, you want to get as much as you can get. And again, at First American, we look generally almost all the time, our producers are writing at least 50% extensions, sometimes 100. And if they can get guaranteed replacement cost, that's what we're going to do.
Wow, that's amazing. And that's why it's so important to make sure you have that on your policy. You never know what might happen.
Yeah, absolutely.
Yeah.
It's a critical thing to look at this time with this inflationary environment that we're in, is to make sure that you've got enough coverage. Of course, we can do that here at First American.
Very cool. Well, thank you, Doug. Is there anything else you'd like to add about this?
I just think the thing is that this is the type of thing that we do at First American for our clients. We like to say that we work for you, and that's even in our tagline. And so, it's something that we're not working for the carriers, we're working for our insureds. And we want to make sure that the policy that we write for our insurers works for them at the time of loss, because that's when they need it.
Okay, well, thank you so much, Doug. Well, there you have it, everyone. Here at First American, our producers and our trusted risk advisors like to pay attention to these details to make sure we're educating our customers on their policies. Please contact us if you'd like to review your homeowner's policy or any of your other insured risk, like your auto, umbrella, or business. At First American, we work for you.